What are the FHA loan requirements in a nutshell? Well, you need to have a 580 credit score. Qualifying for the minimum 3.5% down payment, which is a 96.5% loan to value ratio, is the most popular option. And it does require you to have that 580. If you don't have a 580 credit score, let's say you're between the credit score of 500 and 579, you could still be eligible, but you have to have a 10% down payment. So on a $200,000 home, or let's say a $250,000 home, that's $25,000. The higher down payment serves to offset the increased risk that you are because your credit is on the poor end of the spectrum. And so if you have a below 500 credit score, you're going to be ineligible for pretty much all financing, but definitely FHA financing. Now, one of the key ingredients that I want to remind you is that it's not just about your score. Now, you can Google a lot of this stuff, but this is some of the information that you can't Google. And so you want to pay attention right here. It's not just about your score, it's also about your history. And so if you have a 580 credit score, but you have a lot of late payments or even more than one or two in the last 12 months, you're probably going to have a difficult time getting an approval over someone who has a higher score. If you have those types of scores, a 580 or 600 even, and you don't have late payments, then you're going to have a little bit of an easier time. And so it's not just about your score, it's about your history. If you've got charged off accounts, we don't necessarily have to count those, but if you've got repossessions or judgments, like all of those things come into play. And we're going to talk more about that a little bit later in the presentation. What is FHA's debt to income ratio requirements? And so the standard guidelines, now we can exceed these, but the standard guidelines is a 31% front end ratio. That's your housing payment divided into your gross income. That's what a front end ratio is. There's two different ratios lenders look at. The first is your housing payment divided into your gross income. It's a 43% back end ratio. That's your total debt, including your housing payment, divided into your gross income. Again, these are starting points. They're not absolute limits. If you have good credit, if you have reserves, if you have down payment, like all these different factors come into play, then I have seen people get approved as high as 56.99% on the back end and somewhere around 45% on the front end. But those things are not guaranteed, right? And so you need to have strong compensating factors. You need to have decent credit for those to be the case. Anything, especially anything over 50%, and sometimes anything over 45%. So the other part of this, and this is just like an add-on here about your DTI, is that student loans are something that you need to consider. So if you have student loans and you're calculating your debt to income ratio, understand that even if they're in a deferment status, the lender still has to calculate a monthly minimum payment. And so student loans can significantly impact your DTI even if you're not currently making payments. And so what FHA is going to do is they're going to take your total balance and they're going to multiply it times 0.5%. So that's half of 1% of the total student loan balances that you have across, if you have multiple loans or even one, and they're going to use that as the monthly payment for your debt to income. So if your payment exceeds, if your actual payment is more than that, or if you have a payment, let me back that up, because if you have a payment that's reporting that's more than zero on your credit report, the lender will use that. But if you don't, they're going to use this 0.5% calculation. These rules apply even if you're in deferment or even in some type of forbearance, until they're actually forgiven. This is how the lender is going to view those things. And so if you have student loans, you want to pay attention, because this is kind of how FHA deals with them. So now it's a lot better than it used to be. So just a few years ago, we had to calculate 1% of your balances towards your debt to income ratio. But if you have student loans and you're wondering, how does FHA treat them? This is how they're going to treat them. You're going to add up the total balance. If you have, you know, $8,000, and what is that? That's 1% is 800. So that's, yeah, it's like $40 a month, right? Something like that. So that's how FHA is going to treat your student loans.